One question I've gotten more and more over the past year as Palantir stock has ripped from 28 bucks all the way to $142, up over 400% in the past year, is whether or not I think Palantir is still a buy right now. And I've gone on record multiple times in videos, in comment sections on my Patreon, saying that if you're a shorter term investor and you plan on holding Palantir for maybe 1 year or 2 years or 3 years, I don't think it's a good buy because there's a high probability that we're either dead money or we see some share price depression in order to get Palantir back to a more realistic valuation, and specifically the trailing and forward PE ratio. We're going to dive into where Palantir's PE ratio is right now, and then we're going to compare it to 3 other high growth tech stocks who have hit very high PE ratios, some of them even higher than Palantir is at right now, and then what happened with the stock price of those stocks over the next few quarters. And with that, we can get a pretty good idea of how these disruptive high growth tech stocks react after they hit these extremely high PE ratios. I'm excited to get into this video, but first, if you're new here, welcome. And if you're not subscribed, go ahead and click that subscribe button. Help us get to our short-term goal of hitting 10,000 subscribers on this channel. And if you want to hear about Palantir and any other growth stocks I'm buying, selling, holding, any research work I'm doing, consider joining the Patreon. I'll have it as the pinned comment down there, and it's the first link in the description. All right, let's jump into the video. So if you didn't know, I'm a Palantir shareholder. It's my largest position in my entire portfolio, and my cost basis on Palantir is $8.17, which means we're up 1,645% as of recording this video. And also important to note, the last time I bought new Palantir shares was in May of 2023. That's been over 2 years ago. The last purchase I made was at $7.59. I would love to pick up some more Palantir shares for $7.59, but I was buying like a madman all the way through the back half of 2022 and in 2023, because at that time I felt like Palantir was unbelievably undervalued. And no matter what anyone tells you, valuations absolutely matter in the long term with companies. In the short term, PEs can get pushed way high and way low, and valuations are one of the things that drive stock price movements over the long term. Over the short term, no, it's not about valuation, it's more about sentiment, okay? If there's a lot of hype and excitement around a stock, it'll get a ton of momentum behind it. If the story is getting better, if the growth rates are accelerating, that stock will be popping higher. So the valuation metric we're going to focus on today is the PE ratio. Palantir right now has a GAAP PE ratio on a trailing basis of 620. On a forward basis, it's looking better, but still very, very high at a 420 roughly. For comparison, the average PE of all the stocks in the S&P 500 right now is just below 30 times trailing earnings. So Palantir is trading more than 20 times richer than the average stock in the S&P 500. A lot of people would argue, well, it's about 20 times more valuable. We can get about 20 times more growth over the next 10 to 15 to 20 years. That's a valid argument. I'm with you. I generally agree with that as well. But that doesn't mean Palantir is just going to move up in a straight line forever over the next 5 or 10 or 15 years. Now, in order to wrap our heads around what typically happens with an extremely disruptive, high growth tech company that has hit really high PE ratios, we're going to look at 3 different companies. We're going to look at Tesla, we're going to look at Netflix, we're going to look at AMD. Just like Palantir, these companies are leaders in their space. They're big time innovators, they're big time disruptors, and they've had periods of absolutely insane stock price growth and underlying fundamentals growth. And over time, we've seen extremely high PE ratios on these companies. So let's dive into the first one. Tesla's highest PE ever recorded was a 940, and that was in December of 2020. So let's check out where the stock price was in December of 2020, and we'll see what happened over the next few quarters with Tesla. In December of 2020, when Tesla had more than a 900 PE ratio, the stock was at $235. A week later, the stock jumped roughly 25% all the way to $293. And then from that $293 peak, a few weeks after it hit that 900 PE, the stock dropped over 30% in just a few months. And then the stock recovered, but it took more than 10 months total to reach back to that roughly $290 range. And from that peak in 2021 all the way until today, the stock has only gained 5%. Yes, it's gone on some runs here and there up to much higher than where it is today. But if we just go from that peak to where we're trading at right now, it's about a 5% gain over multiple years, 4 years. Now let's look at Netflix, another growth beast, another disruptor. The highest PE ever recorded for Netflix was in December of 2015, and the PE was 394. In December of 2015, Netflix was right around $120 a share. And after hitting that all-time high PE of more than 390, the stock dropped over 30% in the next 6 weeks. But very different than Tesla, over the next 5 years after that, the stock went on to rip higher, up over 300% over the next 5 years after it hit that peak in December of 2015. Now, the last stock we're going to look at here in order to compare to Palantir is another stock that's in the AI space. Specifically, they're on the hardware side, and this is AMD. AMD's all-time high PE ratio was very recent in September of 2023 at 856. The highest recorded price for AMD in September of 2023 was roughly $109 a share. And over the next 2 months or so, we saw the stock drop by about 12%. But then after that, if you went for the next 9 months, the stock ripped higher, up over 89% from that peak. Now, from that September 2023 peak, if you held until April of 2025, you would have been down 21%. But if you held until today, you would be up 31%. So what typically happens when a stock like Palantir hits their peak PE, then the stock drops somewhere between 10 and 30%. But here's the thing, we don't know if Palantir's peak PE is 620. We saw in just the few stocks we looked at, there were some stocks that hit into the 800 PEs, some stocks that hit into the 900 PEs. I've seen other high growth disruptive tech companies like this hit into the thousands of PEs before. So is Palantir done running? I don't know. No one knows. We might get another 20 or 30 or 40% gain from here before Palantir hits that peak PE ratio. But once it does hit that peak, the stock price is likely to take a breather. Probably going to be down somewhere between 10 and 30%. They might have hit their peak PE today, and we might start a downward descent of roughly 30%. If Palantir loses 30% of their value, the stock price will be roughly $100 per share. For a lot of Palantir investors out there, that is no big deal at all. I told you earlier that my average cost with Palantir is in the $8 range, $8.17 to be exact. So if the stock drops to 100, is it hurting me in any major way? No, not at all. I'm still up over 10x on the stock if the stock drops to $100. But we've got analysts out here upgrading Palantir right now, saying that Palantir is a buy at $140 and that we should expect over the next 1 year for Palantir to hit $160. Dan Ives today raised his price target from $140 to $160 and reiterated his buy target. So if he's right and Palantir gets as high as $160, and then after that we get that 30% decline that we're talking about that we've seen in a lot of these similar tech stocks, then the stock would be at roughly $112 per share. And let's just say hypothetically that 160 price target is even too low and we hit as high as $180 before we get our 30% decline. If we were to decline 30% from 180, if Palantir was to hypothetically hit that, then the stock would be at $126, which is really not much lower than where it is right now today. So is Palantir going to see a crash? Probably. I have a pretty good idea of when that might be. I don't have a specific date, but I bet you when the revenue growth rates stop accelerating for a few quarters in a row, that's when we'll get our decline. That's when we'll get that somewhere between 10 and 30% crash. But like we've said, there's so many good things going for Palantir right now. There's so much momentum behind Palantir right now that if they keep coming in and crushing earnings and smashing it, and we've got good overall broad market sentiment, we could definitely see Palantir hit 150, 160, 170, 180 before we get that drop that pulls us back down to a little bit more realistic PE. We might see the PE get to 700, 750, 800. We've seen it with tons of tech stocks over the past few years. So if you hold shares of Palantir already, or if you're buying new shares of Palantir right now, just be ready for some volatility. There's going to be some big upswings with Palantir, but there is eventually going to be that big time drop with Palantir. We can't go up in a straight line forever. We've got to create some price price stability, and what can do that is a 10 or 20 or 30% drop after the fundamentals change in some kind of a way. For 8 quarters straight now, we've seen their revenue growth rate accelerate. So not only is their revenue accelerating like crazy, but the actual growth rate year over year has gone higher each and every quarter. That is not normal for most stocks in the stock market. Normally over time, you see the growth rate slowly drop. Maybe it was a 30% growth company a few years ago, and then it drops to 25 over the next few years, and it drops to 20, and then it drops to 15, then it drops to 12, then it drops to 8, and that just happens as the company gets bigger and bigger and bigger. Palantir is doing the opposite. Check this out. 12.75% 8 quarters ago, and then 16.8% revenue growth, and then 19.61% revenue growth, and then 20.78% revenue growth, then 27.15, then 29.98, then 36.03, and then the most recent quarter, 39.34. This trend cannot stay forever. Once they have a reversal of this trend, that could be the catalyst that makes the stock price drop in the short term. What's good for Palantir though is that their earnings are still growing like crazy. So if the stock price starts to drop, the earnings are still going to be going up, and the price to earnings ratio is just going to look better and better and better each and every quarter as we move forward. Even if the stock price doesn't drop, the way they're growing earnings lately, up over 100% per quarter, every single quarter, the PE ratio is going to get in a way better spot over the next few years than it is right now. So now I want to talk about what I'm going to be doing with Palantir. Am I going to try to sell before the stock price drops? No, I'll be holding all of my shares. Am I going to sell when the stock price drops out of fear? No, I'll be holding all of my shares. This is a core holding in my portfolio, and as I said earlier, it's actually my largest holding in my entire portfolio. And with a core holding for me, the minimum time horizon I have is 5 years. With Palantir, it's even longer than that. So let me know in the comments below, where do you think Palantir stock price could get to before they have that probable drop? Or do you think we're not going to have a big time drop at all, and we're just going to keep on trending upward, and the PE can slowly catch up to the stock price over time? I'd love to hear what you have to think in the comments below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. If you made it this far, consider checking out the Patreon with the link in the pinned comment down there or the first link in the description. I appreciate you being here in a major way. Thank you so much. Have a great day.